Good morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, August 21st. What a day yesterday. Everything got sold into, not a bounce in sight. Market just ripped to the downside. Good assets were sold, bad assets were sold. So pretty bad day yesterday. Actually happened very fast and very quickly too, with very little bounces in sight to actually get short if you weren't short coming into the day. Well, today is a monthly options expiration, and I was looking for a little bit of a bigger bounce, or some sort of a bounce rather, and nothing has transpired. We are at 4 standard deviations away from the mean in the spiders. That means that we are extremely stretched in the last 3 days of trading. I would suspect that we get some sort of a bounce today. So here's the difficult part. If you're short or you want to get short, you cannot get short 3 full days down here, almost 100 S&P points. Very difficult to do so, and very dangerous. So I would be looking to be a better buyer than being a short seller. Now, if we rally hard, then maybe that opportunity may arise where we could get short the market early on during the day. Remember, it is also the doldrums of summer. Nobody's here. You probably got about 2 to 3 hours worth of trading, and that's pretty much it. And then the last half hour of trading, everything else will probably go sideways. Now, remember, that doesn't always happen, as we can see this week. News trumps the charts, and China has been in the headlines of late, and it is getting crushed. It got smashed last night yet again, and that's what market participants are worried about, is global slowdown, and rightfully so. I mean, the Fed's been pumping liquidity for the last 6 years. Really an unrealistic type of a market, where the market just doesn't go up every year for 6 straight years. And this is the year where now the markets are down for the year for the first time in 6 years. So anyway, just a word of caution, guys. The longer term investors, be careful. Been mentioning many times for the last year, don't be looking to buy and add to your longer term positions. You're going to have a better opportunity. And when I show you the indexes, you're going to see that there is some further downside to happen here. I just want to real quickly explain the McClellan oscillator. I do not have it up during the short video I have here today, but we're at negative 40-ish. Where we are coming into an area where we could look for some sort of a bounce. The markets could reprieve and bounce a little bit. That could very well happen. So just want to keep you on your toes. Negative 60 would be a little bit better, ideal for a real big washout, and then again markets rally. That's another thing that I'm looking for today too. So markets are down about 475. They kind of recovered early in the morning, and if we can get a flush at the opening, I think the sellers will be exhausted, at least for the day. Remember, the spider pin is 210. Does it get there today? Probably not, but at least they probably want to try to get as close as possible. So remember, there's a lot of open interest at the 210 strike on the calls and put side. So something just to think about. Again, we talked about that doesn't always happen. And it may not happen today, but just keep an eye on things and look for some stabilization in the oil sector, the oil stocks, and that may help, and actually will help, the equity markets. Okay, spiders, take a look here, guys. Our symmetrical triangle in our horizontal channel that's been brewing for the last 7 months, 8 months is finally officially broken out and closed out of that channel. But remember, look at the Bollinger Bands. We're outside of that Bollinger Band, guys. So we're way outside it. And also, if you look for some support, we don't get any support until the 200 to 198, which is the 2000 in the S&P and 1980 in the S&P. So if you're looking at the ES, 2000 is the next real support, and 1980 will get you the S2 support here. Okay, but look at the momentum indicators, MACD, RSI, not even close to being oversold. So this has plenty of room to run, and this is going to be really the big downside target, the next big downside target. Okay, that's the spiders. You might want to write that down. Diamonds, you can see here, diamonds are in big trouble. Not only did we break down our long-term trend line, but we had, our long-term horizontal channel here up in this area, but we had a last-ditch effort here. And if you look at our volume zones, right, there is absolutely no support until it comes back to the October low, which is the 158. Now, does it get there? I'm not sure if it gets there in the next couple of days, but if we don't stabilize and get back into this area of support quickly, then I think you can see a big flush next week, the week after. I'll be honest with you. I mean, this market does not look good, and nobody cares about looking to hold anything. Now, remember, grain of salt. Why? Well, it is the summer doldrums. Tier 2, Tier 3 traders are just looking, watching a book. And you have the algorithms really running nuts. They're just going crazy, looking for bids to hit and run the sell stops. So, and that's what's been happening. So, keep that in mind, guys. That's the new markets here. That's what's been going on for the last 5-6 years. Algorithms are coming into play bigger and bigger, and they're being bigger players in this market. So, just a word of caution: if you think we can't get here, think again. Trust me. But anyway, this is the biggest downside target we have here. I'd like to see this market roll back up again and get us another short opportunity. Transports came back into this downside area of resistance, which was support at one time. Now we're back below it. Again, your next area of support is going to be the 143 area in the transportation sector. Next is the IWM, and I mentioned many times, IWM usually tops, creates a market top before the other indices, and this does not look good. I mean, we had a good month and a half of moves, and sure enough, fell right back in, and we're hitting support now at 116 and 114.55. Might want to write that down as well if you're watching that during the course of the trading day. A loss of this will get you much lower prices here, guys, and that's going to be right about here. And if we don't sustain this area here, then we're going to flush to the October lows of 103.53. Okay, and as you know, risk happens really quick and real fast here. So just keep that in mind. Watch that IWM as well as crude oil. And lastly, we have the Qs at the 200. Broke down this symmetrical triangle here, and it's going to need to hold here before. Otherwise, we are going to look for lower prices down at this area here. Okay. Hope it helps. Be very careful out there today, guys. It's going to be very, very whippy on Friday. The last thing you want to do is just really take a big hit today going into a weekend. No need to do that. Reduce your share size. You get a couple of bucks in the account. Call it quits for the day. All right. Hope it helps. Have a great weekend, and we'll speak to you on Monday. Take care, everybody.